I'm Howie Lim. This is Money Hacks by the Business Times. Stablecoins are pretty cool in theory. They promise near-to-instant transfers of any value across any border at comparatively low transaction costs, and the list of benefits isn't short. Stablecoins are basically normal currencies, chiefly US dollars, but in the crypto ecosystem, and Singapore's stablecoin regulatory framework is more mature than those of its peers in Hong Kong and the United States. Welcome to Money Hacks, a podcast series by the Business Times, where we explore useful financial tips to help you on your money managing and wealth growing journey. I'm Howie Lim. And helping us out today are Amy Zhang, head of APAC at Fireblocks, and Koen Hoorelbeke, investment strategist at Saxo. To me, it's sounding like stablecoins might be something worth considering in one's portfolio, just because of the name. But that's ridiculous. Perhaps we need to hear everyone's elevator pitch?
I wouldn't. I will tell you why that is. Again, I think the investment thesis is the same thing as holding the US dollar, right? And you can have your own personal opinion. And I'm saying the US dollar because realistically, there's two large stable coins in circulations today, and they're both US dollar denominated. So I'm using it as a proxy. Certainly in the future, there could be other stable coins of different currencies that you can then think about it as your FX investment strategy. But I don't think most people hold stable coins because they want to invest. I think most people hold stable coin because they want to use, and they can use for many different things. Yeah, you want to get off the elevator now with my elevator pitch?
I'd like to mention maybe that's a misconception. Everybody thinks you can really, as a retail investor, invest in stablecoins, which is only half the truth, because in traditional finance, there is really not a way to invest in stablecoins. If you really want to invest in stablecoins, you have to go to the crypto exchanges.
So why all the hoo-ha right now? Singapore's MAS just implemented new regulations at the beginning of July, and in Hong Kong, its stablecoin licensing regime is set to take effect on August the 1st and has sent crypto stocks soaring. Here's Amy Zhang, head of APAC at Fireblocks.
I actually think most people feel more comfortable when the regulators are being very prescriptive and are enforcing the rules that they've set out to do. Because the reality is, for an average person, yes, there's a great opportunity in the wild, wild west, but there's also a huge amount of risk, right? I think there were many people that were really negative impacted by some of the challenging times in crypto, so to speak, in the last few years, lost personally a lot of money, not only trading these assets, but also where they decide to store these assets on different exchanges. And these are people's hard-earned money in the end. So I actually think having better regulations will promote more retail adoption. And more importantly, clearer regulation means more institutions could come in and build more retail-friendly products. So that's your financial institutions, trading platforms, the names that you and I both use to every single day. Now they see that there's a license that they can apply, that they can operate in. Now they can then take on the roles and responsibility of these venues where individual users can then interact with.
Fair enough. And other analysts expect stablecoins to shake up financial services more than anything else, right? Here's Koen Hoorelbeke, investment strategist at Saxo.
Which company do manage the stablecoins? Usually it's USDC, so Circle, or Tether is USDT. If those companies aren't under some regulatory form, which they are, but imagine, because anyone can start a stablecoin actually. But who will control me? And what assurances can I give to the people who give me their money to change in stablecoins? Probably nothing. It's a trust case. With the big companies, they have certain rules that the regulatory framework must be in place. If the regulations change, that can have a huge impact for the people who transfer or change their money into stablecoins. For example, the Trump administration, they are very pro-crypto, so they are changing all the regulations in order to make sure that that whole framework is in place, and that's a basis, a building block to build all the other business around. So that's a very good thing, actually. Who knows what will change? Let's say Trump is out of office in a couple of years. Is the new president, will he support the same pro-crypto feelings, or how will they look at the whole crypto world. And that remains a risk. Stablecoins are usually pegged against the US dollar. What is a big danger for a stablecoin if the country like the US or the Eurozone emits their own virtual dollar? That can be a big danger for the stablecoin as well. Because then, why would you put your money in a stablecoin emitted by a third company rather than a virtual dollar emitted by the government? Other changes like interest rate changes also have a big impact on stablecoins as well, or at least on the companies who emit those stablecoins.
Living in Singapore, you probably don't feel like you have a difficulty to access certain products or get access to a payment, right? But if you imagine you're from a developing country where the banking rail has not been as established, or the access to a US dollar-based financial instrument is not as readily available, for those instances, actually highlighting the stable coins and the access that it has provide will allow them to democratize the access to these products.
And since August 2023, MAS has set requirements for stablecoin issuers, leading to increased adoption. Stablecoins must maintain reserve assets held in cash, cash equivalents, or 3-month Singapore government bonds, equal to at least 100% of outstanding single currency stablecoins and denominated in the pegged currency. So it's all sounding pretty safe, or is it? More with our experts in a moment.
Breaking news from the Business Times podcast team.
Hi guys, this is Emily Liu, your host of Market Focus Daily. I've got some great news. Come July, Market Focus is getting bigger. I'll be bringing in market and investment experts into the studio to share analysis and opinions on what moved the markets and what to look out for in the week ahead. Every Friday, starting on July 4th.
Look out for Market Focus Weekly from the Business Times or wherever you get your podcasts.
And now, back to Money Hacks from the Business Times.
Welcome back. Stablecoins is what we've been talking about with Amy Zhang, head of APAC at Fireblocks, and Koen Hoorelbeke, investment strategist at Saxo.
One of the big advantages of stablecoins is that the cost of transferring money is much lower than traditional finance costs between banks. To give an example, if you look at the cost now to transfer money, it will be between approximately 30 cents to maybe $5 per transaction. On the stablecoin, on the blockchain networks, for example, international bank wires, starting from $35 to $50 for a simple transaction. So it's very clear that there is a huge difference, and that's why it's so attractive also. If I want to transfer money from here in Europe to somebody in the United States, it will cost me a couple of cents. If I do that using normal banks, it will cost me a lot of money. So that's a big advantage of stablecoins. That's actually why it is so popular. If I have an account at a crypto exchange, I can wire my hard fiat, my euros, my dollars, to that exchange, change it to stablecoins, and then I can actually use it to maybe even stake and or transfer to other people without actually losing a lot of money.
I actually think stablecoins really exciting in that perspective because it's probably one of the only instruments in the world where you can move hundreds of millions of dollars almost near instantaneously, right? And if you think about normal banking rails, if I want to wire you some money and an average user at a normal bank in Singapore will have a daily limit of whatever payment rails are in Singapore are set these days, so 200 grand or however that is. And if I want to move more, you would either require early discussion with the bank or have to wait 1 day, 2 days for the bank to clear the amount. Stablecoin, if you're talking about liquidity, you can move any amount of money as you like, as you also have that asset between two users. So from that perspective, it certainly has better liquidity from sending larger sum of capital in different way than how banks would treat their transfers. Less known benefits. Maybe it's around Again, I think we talked about earlier just the liquidity aspect of it. I think a lot of times people think that money moves fast, but it does if you're talking about in-country movement for small value that an average person day-to-day will experience. But the second you get into cross-border, moving across currencies, moving larger sum of money, then money moves extremely slow and becomes extremely expensive for businesses and individuals to operate. And I think these are some of the areas where stablecoins, with the ability to get a better transparency, ability to have cheaper fees to move assets across borders, ability for speedier transactions.
As retail investors, we're always told diversification is key. So how much of a typical retail investor's portfolio, if any, should realistically be allocated to stablecoins, considering their unique risk profile and the specific role they play in a crypto portfolio? Here's Amy from Fireblocks again.
For an average user, your option is probably to buy it through the secondary market. Some venues like Coinbase and other exchanges will offer a one-to-one, making it very cheap for users to get access to these assets. In other cases, sometimes stablecoin could be trading at a discount or a premium, meaning they could trade higher than the dollar worth or lower than the dollar worth, depending on the venue it's being traded at. So if you think about a situation where certain crypto activity is happening and people want to sell their stablecoins to buy crypto, then naturally the pair could trade a little bit lower. Whilst in other examples, when people want to do the opposite, stablecoin might trade higher. I think if you are looking at using stablecoins as a proxy to hold US dollars, then I would follow probably similar allocation strategy as you would if you are someone that has currencies as part of your investment strategy.
Well, personally, I wouldn't look at stablecoin as a new or different asset class. I would really treat stablecoins as virtual or digital cash. Whatever allocation you have for cash in your portfolio, stablecoins should be a part of that. It's like investing money in the dollar. It's cash. It's hard fiat. Simple as that. If you really want to invest in stablecoins, I think you really have to think about the underlyings, the companies who make those stablecoins.
Oh, geez, Koen, party pooper much? Oh, wait, Amy doesn't really believe in stablecoins as an investment class either.
I think a lot where stablecoin first started was really to use as a medium of payments for a lot of the crypto trading use cases. Now, over time, I would argue that's probably still the main dominant use cases. In some emerging countries where access to US dollar-based assets are difficult to get access to, so think in Latin America or some places in Asia, stablecoin has become a US dollar alternative that they can invest into. However, 90% of the world today probably are looking at stablecoins more of a medium of settlement from trading use cases to cross-border payments. And I would say the payments use case probably more resembles what stablecoins being used today.
Takeaway order Money Hacks 227 is ready. For all their promise of stability, stablecoins aren't exactly set it and forget it investments. Actually, beyond the headline benefits of low transaction fees and lightning-fast international transfers, we should be wary of hidden costs like network fees and slippage during conversions. Plus, stablecoins aren't a typical investment asset class for portfolio diversification. While they democratize access to dollar-based assets in developing nations, a healthy dose of caution is needed. Treat them as cash, not as an investment. That might be the smartest play. A big thank you to Amy Zhang, head of APAC at Fireblocks, and Koen Hoorelbeke, investment strategist at Saxo. I'm Howie Lim, and this has been Money Hacks by the Business Times.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.